Good morning, good afternoon, good evening, depending on what part of the world you're in. I'm going to check the Hangout to make sure that I'm casting and that you can see us all, because sometimes YouTube's a little bit slow. So I don't know what's at the moment. It seems that I'm talking and it says we're live, and I don't see anything on YouTube at the moment. I don't know whether you see anything at the moment, Darren. But it all looks in the dark. You know, there's just a screenshot on there, but I'll carry on talking just in case YouTube is sort of going to get its head into gear.
Oh, yeah. Oh, we're coming now. We're there now.
Oh, we're there. Mine's screen. Ah, there we go. There we go. So we're a big delay there from when YouTube sort of said hello to us. Hello, world. There you go. Look, it's so strange to watch yourself back in time, you know. I'm waving my arms in the air, and I don't know what I was waving my arms for. So I don't know how long it's going to be. Where am I? I'm looking. I'm going to say how long it's going to be for YouTube catch us up. But of course, they're not going to catch us up, are they? They're always going to have that big delay. Anyway, so I sort of got sidetracked there because of YouTube. That was big delay. So what I'm going to do is let me come back over to the Hangout rather than look at YouTube. Now, trading. If you're starting out in trading, or you're been in trading for a little while, there's a few things that you should sort of start to that you may be aware of, I should say, and that's what's called little indicators. Now, there's so many out there, and we're going to go through a few of them tonight, on this Hangout. And what I want to say to you is that don't overcomplicate things, because a lot of people seem to start trading, and what they do is they overcomplicate it, and they feel that the more indicators they have on their graph, the more things that are happening on their graph, the better it is for them. I find to keep it to a minimum, get a little indicator that you like, stick with that. You may want to use 1 or 2 indicators at the same time. I tend to use between 1 and 2 at the same time. I don't go to any more. I'm not saying that mine is the correct way, but I like to keep things simple. Okay. Now, what I'm going to talk to you about is, before Darren starts showing you his indicators that he's going to show you how to set up tonight, I want to talk to you about bull markets and a bear market. Okay. So what is a bull market, and what is that? There is a bull market. Okay. Now, when the candles get lots of bull markets and lots of bear markets in that time period. So you want to, when you're trading, I like to, and again, I'm not saying this is the right way to do it, but I trade. I'm successful at trading, and I do binary option trading as well, and I'm successful at that. Some days I'm not so successful. Some days I'm more than successful. Like today, I had a day where I got up to $400 and then dropped back down to 125, you know. And then last week I got up to $700, and I've been drawing from my trading, my binary option trading, about $200 a day, Monday to Friday. I don't do anything at the weekend, but I won't be this Monday drawing out trading as I do with my, you know, just my longer term trading. You know, I like to, first off, I have a look at what I think's been happening over the last 24 hours. Have we been in a bull run? Have we been in a bear run? Okay, so what I want to do is I want to share my screen, and I'm going to take you over to, let me share the screen. I'm going to take you into Zukul, share the screen, entire screen. Let me know, you can give me the thumbs up there, Darren. You've got the screen before I minimize this. Has he got the screen? He's got it. Yeah, lovely. So I'm on the Hangout. So what I want to say is, regarding what we're talking about this evening, if you've got any questions on this Hangout, then pop them into this chat here, and we'll try and deal with those. Bearing in mind, there's a big delay. Okay, there's a big delay on this Hangout this evening. So we are in the back of Zukul. I'm going to make this bigger. Okay, now I've put an indicator in here. Let's just close that. I've put an indicator. Okay, I've got 4 lines here. Now I'm going to show you how to set this up. But basically, when the red line is at the bottom, okay, then the blue line, then the green line, and if the yellow line is on top, if all of those lines, if they're in that order, that would be a bull run. Okay. Now, if you look over here, if I come back in time a bit, you see they start to crossing over here. Okay. So there's a change in the direction. We had a sort of a bear run here. You see, this ball came up, this red line came up, it started to come up the top, and then you can see that the prices start to drop. So we're in at the moment. We're just coming out. There was a little bit of a bull run here because you had, look, red at the bottom, then the blue, then the green, and then the yellow. So there was a bull run, and as you could see, the price was going up. You know, so as you can see from this point here, the price is risen up to here, and now the yellow's taking a dive. So we could be sort of starting to change direction. Okay, we could be starting to change direction, but with this type of these indicators that I put in there, these are to give you a bigger window, if you like, to give you a window of maybe the last 24 hours or the last week or something like that. You know, so you can zoom in and out on here. If I zoom right back, you see you've got this yellow, green, blue, and red to tell you that there's a bull run, and lo and behold, the price has gone up and then it's into a bull run. Then you start to see the yellow, and hopefully you can see that on the screen, but the yellow sort of starts to dive down, and you're starting to go into this little bear run. And round here, it crosses over, and you've got this yellow that's, well, it's sort of zigzagging in and out of each other here. But if you come out even further, hopefully this chart's going to pick up with me, you can see that, you know, if the red's on the bottom, then your blue, then your green, then your yellow, that indicates a bull run. As you can see, you had a spike there. So with these indicators, what you want to do, so I'm going to just escape out of this. You want to come, this will only work with your semi-automatic trading bot inside Zukul, okay? It won't work for your bots where the robot does all the work. It'll only work for the semi-automatic trading bot. So with this bot, this semi-automatic bot that I've got a trade in at the moment, and what I've got is I've got 4 wins, you see. So I've got a 1.03 return on investment there, okay. I've got a 7.94, I've got a 0.35 and a 0.5. For me, as long as I'm getting a win, okay, as long as I'm increasing, I'm making a profit, I'm happy with any profit, you know. So I got a 31 cents, a 2.38, a 7 cents, and a 10 cents. And to help me do that, I was using these indicators here. And I just bought a lot somewhere back here recently. There it is, as you can see it, because the indicators were giving me the signal to say that we're about to enter into a bear run. And I bought it. I bought it a bit early, but I wanted to buy it just to sort of show you, okay, just to show you that there's a buy at the market there. Now, what I would have do in a normal situation, I wouldn't have bought in there. You see, I'd let the indicators come down and show me that there's a bear run about to start, and I would buy my first order. And if the bear run continued, I'd place in the second lot, the third lot, and fourth lot, and so on. You know, I'd buy little bits as it goes down, because a market can change fairly quickly, okay? So how do you set up these indicators? Now, what you want to do is you come up to this little, if you're looking at your graph here, you've got one that shows you the candles and, you know, different how I view with the candles. Next one you've got is you've got your background and things like that. You can set up your background. And the next one here is like a chart with a wiggly line on the top of it. So if you click on that, that gives you your indicators. Now, what you're looking for my ones is moving averages, okay? So you click on that moving averages 4 times, okay? You just dump 4 of them onto your screen. Once you've got them on the screen, you now need to go and set them up so that they work as an indicator for you. Otherwise, they're all going to just be the same, and they'd just be one line, you know? So any one of them, doesn't matter which one. So you go, when you'll see, here's the indicators here, okay? It's 1, 2, 3, 4. So there's a little eye, if you like. If you click on that eye, it hides it. If you click on the eye, it puts it back on the chart, you know. So if I do it to that red one, click on the eye, the red one's gone. If I click on the eye, it puts it back on the chart. Next to it, you've got this little cog, okay, and that's where your settings are. And then if you want to delete it completely, you've got this red cross, okay. So what I'm going to do is I'm just going to delete this red one just to show you. There it is. And now I'm going to set that moving average back up. So I'll put in a moving average. There we go. put the moving average, and it's giving me this purpley one. I don't know whether you can see it. So now what I want to do is do the settings, and it's really, really thin. So I want to get it to how I want it to be. So the first thing I want to do, because this is my red line that I just took away. So I'm going to click on the color chart. I'm going to make it red, and I'm going to make it nice and fat. That's the first thing. Then I'm going to go to the inputs. Okay. In here, I'm going to put 200. Click OK. And there's my red line put back in the bottom. Okay, so let me walk you through each one of these settings. Now, they're not my settings. There's a few traders that I follow, a few blogs that I'm signed up to that I get information about trading. And this was a guy that I follow, and he gave, he gave this in one of his videos of this, how to identify a bull run and a bear run. Okay, so each one of the settings, each one of these indicators will have a different setting. So the red one, okay, the red one is set at 200. Then we'll come to the blue one. Well, the blue one, if you go into the cog, I'll just show you the input. I've got it in blue, the style, sorry, and I've got the line nice and fat. And then the inputs is 100, okay, 100. So I'll click OK there. Then it's the next one on the line is the green one, okay, so I click the green one. The green one is set to 55, okay, 55. The style, again, I've got it set to color green. So obviously I've chosen the color green, and I've made the line nice and fat. And then the last one on the line is the yellow one. The yellow one's a bit hard to probably see on this hangout, but you could maybe change it to orange or something. But yellow is the color I stick with. So I click on this this cog, and I get the color from the color chart, and I say yellow. I could even make it a strong yellow, I suppose, going over that way. And then what I do is once I've got the yellow, I make sure that the line's nice and fat. And then my input here is 21. Okay, it's 21. So I click OK. That's made the line very fat. And that gives you these indicators that will show you to give you an idea of what's happening to a particular market. This is the Bitcoin USD. You can use this for any graph you like, really. Okay. Now, that's one of the indicators that I use. And then one of the other indicators I use at the same time is the MACD. So if I put in here M, there it is, MACD. And that sort of gives a chart at the bottom as well. And it's sort of giving you, it's reconfirming what's at the top here, really. But it's giving you an idea of the lows, the bear markets, and it's giving you the bull markets, and then the bears and bulls and so on, okay? And then you've got this sort of baseline across the middle here that shows you, because it's a moving average, you see, so it shows you the sort of averages is what it is, and it's either in a bull market or a bear market. Now, when you're in these little, bear in mind, when you're looking at these indicators, you can obviously zoom right in, you can zoom right in, and if I move that across and I come in even further, you see, I can see now that I'm not actually in a bull run, because if I was in a bull run, it would be red, then blue, then it would be green, you see, but it's not, it's yellow. So there's an indication there that something's going to change in the market. Now, it could carry on, go back, bounce back up and continue with a bull market, because over here had a little bit of a bull market, and then it started to, the yellow started to come down, even though the price is risen. But as you can see, as the yellow was heading towards this green line here, it started to get closer and closer. Then it's telling you that there's a change in direction. There's something that's going to happen in the marketplace. What you really want to have big confirmation for bull or bear markets, you want nice, big, even gaps between these. The bigger the gaps between them, so there's a big gap between the blue, the red and the blue. Not so big between the yellow's in the way, you see. Big gap between the blue and the green, but unfortunately it's broke with the yellow. So if the yellow, if I come back, let's just see if I can find a nice pattern for you. Look, you see when they get close together, that's it's telling you that you're either finishing either a bull run or a bear run. It's am I going to find you some nice chart here? No, you see, because the red's above the green. So I'm not going to be able to find you a nice point there where they're all equal to one another, okay? So what I'll do is I'm going to come back to the Hangout, and I'm going to stop sharing. So And then I've got two that you want: red, blue, green, yellow. That would indicate a bear run, a bull run. And if you had it the other way round, so 200, 100.
Hey, thanks very much, Jeremy. You've just dropped off, so I'm not sure whether I can hear you. But we don't appear to be catching up on the on YouTube at the moment. You seem to be. It's talking about dropping in and dropping out, and some of the guys are saying that you're buffering, and you're buffering on the YouTube here as well. I thought it was just my internet connection, but it appears to be a YouTube issue. There's a few people logging out and back in again. I'm not sure. Should we just plow on in the hope that obviously the recording will come out the same, won't it? Can you hear me? You need to. I think you're muted.
Refresh the screen and I could see you on the Hangout. So
yeah.
So hopefully we're still broadcasting live, and people might have to watch the recording. That's probably it.
If you've got stock that you want to sell, then obviously you might want to be aware of when, you know, obviously a bear run is running. You might want to liquidate some of that. And obviously if a bull run's happening, then clearly you might want to get yourself positioned to take advantage of that. Now, Jeremy's signals give you the long time frame. And what I've decided to do is I'm going to focus on something that gives you a little bit more of a micro view of that time frame. So use Jeremy's system to give yourself a really good feel of the overall picture, which may be over the past week, past month, or whatever. And then use this one in conjunction, which will help you identify really great opportunities to make some either quick profits or to buy some Bitcoin or whatever it is that you buy it. You know, and make a long-term purchase or investment on that. So I'm going to quickly share my screen, and if you could just let me know if you can see it.
Yeah, I got it.
Brilliant. Okay. Right. So again, just as a reminder, if you've got the regular bots, then obviously what you'll see is effectively this image, just the graphs. So if you've got all the candles on it. If you've then got the more sophisticated bots like the semi-auto bot, then obviously you're then going to have the same graph, but you're also going to have these bells and whistles on the left side and across the top as well. So if you just want the trot to trade for you, then clearly you don't need to come anywhere near this. But if you want to be have some more influence in the way that the bot is going to trade for you, then obviously you're going to start a semi-auto bot, and obviously you're going to use some of these indicators to help you enter markets or exit markets, depending on which way you want to use the semi-auto bot. So what I want to do is just zoom out a little bit, and this is I suppose, the traditional way of looking at the way the market runs. So as you can see, we've got all these sort of peaks and troughs, and you can see these sharp drops, and obviously we then do some more rises, but even in those rises you can identify some really sharp drops here, some more here, there's another one here, and then obviously we've got some more rises going on here, and we can absolutely expect there to be some more sharp drops. Now, wouldn't it be fantastic if you could enter the market here, or here, or better still here? Or people were complaining that you know, Bitcoin was, you know, hitting the floor just only a couple of weeks ago. Well, the price has risen $1,500 over the past few days. So again, it would be fantastic if you could identify these bull and bear markets, so you can actually jump into the market and override the bot. So how do we do it? Well, Jeremy's shown you how you can actually identify the way that the market is going to flow in the future. Okay, so you've got these moving averages. Now it's very easy to see what's happened during the past, because obviously you can see the graph and you can see the moving averages, but it's all about what's going to happen in this space here that's important. So I'm going to show you an indicator which you can get here by, like Jeremy's just explained. You've got this little box up here which is like a graph with some arrows pointing up. If you click on that, obviously it opens up a huge list of indicators that we've got on there. If you scroll down to the P's, we're going to look for the parabolic SAR, which is here. So parabolic SAR. So I'm going to click on that. And we're going to go with the default settings. Now you can see that all of a sudden we've now got all of these blue, they're actually blue dots, which now occupy the graph. Now what I want to do is just take you to here. And we're going to zoom in a little bit to this bit here. Now, how do you interpret the parabolic SAR? Well, Jeremy has just told you about the overall trend. So whether you're in a bear market or a bull market. Now, if you're looking at this as a snapshot, you've got the dates and times running across the bottom here. So you can see here that between 10 o'clock on just 10 o'clock on the what is that, the 19th, right over to 1 o'clock on the 20th. Okay, so this is running overnight. You can see that the market rose, then the market dipped, it rose, dipped, rose, dipped. But overall, you can see that the market is sort of going down. So what are you going to do? If you're going to trade over the next 24 hours, are you going to enter the market by buying it, or are you going to enter the market by selling? Well, these little parabolic SARs, these blue dots, are giving you an indication of what's happening to the price. So as you can see, as the price starts to drop, these dots appear above the candles. So as each candle appears, then there's going to be a blue dot. It'll either be at the top of the candle or at the bottom of the candle. So if I zoom in even further, you can see here that the price is dropping. So the parabolic SAR is indicating that there is a drop, okay, and then the price levels out. Okay, so you can see that there's a drop here, and then the price effectively levels out for a period of time. So the parabolic SAR thinks that the price is now going to go up, but actually then changes its mind. It notices that the price is dropping again because it was going up here, it's dropped. So it's now changed its mind. It thinks the price is going to drop further. So the dots have now gone from the bottom of the candle to the top. And again, it's following down that price. Now again, it looks like it's bottomed out about here. Parabolic SAR has swapped from the top to the bottom, which indicates that possibly this might be a good opportunity to buy stock. Basically buy this cryptocurrency, which is Bitcoin, which is the screen that we're on at the moment. So if you could buy here at around about £5,700, you could then probably hold on to that stock, ride that curve, and then side that curve, and then sell out here. That's what is that, 5,770. You've probably made yourself about £70 worth of profit. That's of course if you've bought a Bitcoin. All right, if you've just bought $20 worth of Bitcoin or £20 worth of Bitcoin, then obviously it would be prorated. But if you bought £5,700 worth of Bitcoin here, then you've made yourself about £70 worth of profit by the time it goes up here. And that time frame is 7:30 to about 8:30. Okay, so it's about an hour. And this is obviously the trading time. It's not necessarily the time in your country. So you can see how that parabolic SAR works. Now, if we then keep scrolling along, see that the price sort of has a bit of a level out, okay, and then it starts to dip a little bit more. Price goes up, and then just here, the price shoots up. And you can see the parabolic SAR is at the bottom. It's anticipating that price rise. You then capitalize on the price, but you see here, the dots are starting to change. And then look what happens, the price drops again. So if you've bought in the market here, you need to understand when to exit the market. And this is where the semi-auto bot can kick in. You can give yourself some targets to actually profit. However, if we just zoom out, you can see what happens to the market in this time frame. You see how the market drops from 8,000, starts again, 5,800. It drops effectively right down here to 5,500. in the space of, what's that, about an hour. And then the market levels out for a period of time. Okay, levels out for a period of time and then drops up again. So overall, the parabolic ZAR is going to be a great tool for you to identify these great big drops that are happening and then understanding where the bottom of that market is going to be. So if we look at the history of this big drop, you can see the price shoots up, okay, and then it drops. And if we look at another drop here, you can see the price is rising again here. There's little bits of dots underneath, and then it drops again. And these are the patterns that you want to look out for and identify, along with the indicators that Jeremy is showing you about the way that the market is trending. Because I would absolutely imagine that even though these prices dropping, that you're then going to start seeing here that those the red, blue, green, and yellow lines, moving averages that Jeremy's already showed you, are going to be starting to cross over. So you've got the parabolic ZAR plus those moving averages, which is going to tell you that the price is going to start to increase. And what happens? Well, we know that what happens is effectively the price shot up again. Yeah. So you can see here, price increases, big drop. And one of the quirks in the market is that the price is slower to rise than it is to drop. It will drop with Bitcoin or with any cryptocurrency, simply because of the panic factor. You know, Bitcoin still has, or cryptocurrencies still have a lot of scare factor. And so if people see the price of a particular cryptocurrency dropping, then what they're going to do, they're going to panic, follow the herd, which is effectively sell, 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 sell. And then once it bottoms out, it's then, you know, your speculators, your entrepreneurs, your people who are in the business and understand what they're talking about, are then going to start to snap up and buy Bitcoin. Okay, and that is obviously what's been happening over the past week or so. So again, as we scan out, sorry, go on.
While you're on that, Darren, if you sort of zoom back in again, because you can see that the dots, the stronger the indicator I can see from the screen, you know, because I haven't used this, what's it called? Parabolic
SAR.
Parabolic SAR. Now, so from what I can see on the screen there that you're showing, is that when the dot is further away from the candle, that's a stronger indicator, and then when it gets closer to the candle, that's sort of, you know, so in them runs where it's showing you that the price is dropping, you can see that the blue dots are getting further and further away from the candles, and then as it sort of starts to finish the bear run, I can see it's getting closer to the candles. So I'm now looking at the actual time. Are you right? If you come right to the present time, are you right on the present time?
I'll go right to the front now.
Right to the front, and then I don't know whether you can, when you get right to the front there,
click that. There we go. Ooh, a bit too far there. Sorry about that. There we go.
There we go. Right, so I can see now that this and if you zoom out a bit, you see that them.
Just trying to get it.
You know,
trying to zoom out here. I think I might have clicked something wrong there.
Yeah. So if I look at mine, I'm just going to share my screen for a second while we're on that, because I've got it on the right view, and I'll put mine on. So hopefully you can see the screen, and I could see here on my screen that these dots are a long way from this, which is indicating like a little mini bull run, and then here I can see this is like a bear run, and I can see now that this dot is right next to this red candle, right in the base of the candle, and the same here, it's right in the base. So are we saying that this could be a change, that this could actually start, you know, this, because the dot right at the top there popped at the top. So is this an indicator that there's a bear run about to start, or a bull run? You see, look, and that's just why we spoke there. The candle dropped right there. So that was right what I was thinking there, that it was at the bottom and it popped at the top there, to indicate that a bear run was about to start. And lo and behold, while we were watching that, it just changed and that candle's dropped right down to here. And then as it's finished up, it's still lower than that. So they're a good indicator, aren't they? And what I can see, the further they are away, the stronger the indication for that particular period. So in this case would be a bear run, is it? It's that the price has been dropping from a previous bull run. There's a bull run, and you see it's a very, very small bull run, isn't it? Because they're very sorry, this is a bear, but what is it? Bull at the bottom.
A bull is a buy, bear is a sell. Yes,
but these dots,
when they're showing that the price is going to go up.
That's it. So it's a bull at the bottom, bear at the top. So when its dots are above, that's showing there's a price going to go down, and this is a price going to go up. And you can see that those dots, like when you look here, it's the stronger, the further they are apart from the candle is a stronger indicator, because look, they're right close in, and it says this one pops in there, and it's a long way from that candle. So there's like a little bull run that's about to happen there. And as this candle's gone out, it's sort of levels again, doesn't it? It's a level price. Yeah, great indicator. So I'll stop rambling.
Well, you can actually see on the left-hand side at the top of your graph, you can actually change the parameters. So you can see the SAR is set at 0.02, 0.02, and 0.2. You can obviously play with those. So you could make them, those are the sort of more popular. And so therefore the people who use the SAR tend to use those settings. But you could make them tighter by obviously changing them to 1s, or give yourself a little bit more wiggle room by changing them to 3s.
So I suppose Google for somebody, isn't it? Google what's the best for parabolic SPA and then SAR, and try it out, really. Just play with it. That's what it's about, not overcomplicating it.
And the beauty of these indicators, and obviously the chart settings that you've got on there now, is that you can effectively paper trade. So you can have a look at how that indicator works with your particular trading pattern, and then you can then start to change the way that you have those settings set up, and obviously then you can then identify the things that you particularly want to look for. See, the bigger the number, the tighter those patterns last for. It's much more choppier if you have them. So if you have them set at 1s, it gives you a little bit more breathing room.
And it's so it's it's very interesting. I find where's the hangout? The indicators are there really for you to sort of play with them, but not get overcomplicated with them.
So over the next couple of weeks.
Because
again, different indicators suit different people.
So I think we got a problem with the hangout, which is such a shame. Barbara's just sent me a message saying that they can hear you okay, but not me, and it's me that's broadcasting. So it's very strange. So maybe we'll